Right. Who has any questions? Hit me. I can. Let's talk about anything, really.
I have something I'd like to talk about or ask you to talk about.
Go for it.
Which is something, well, because you're better qualified to answer it. I keep getting asked about where to buy things, how long to hold things for, context, what does it mean, this sort of thing. And as an example, on Saturday, I tripled a small account, but it's a very small account.
Yeah.
But that was just mucking about. So what I'm getting at is the time horizons. Like, how do you define those? You know, hourly, daily, weekly, monthly, yearly, this sort of stuff. Because people seem to get really confused and hung up on these things.
Yeah. What asset are we talking about?
Any asset.
It depends. So, like, every asset has its own different timeframes, and obviously every person has their own different timeframes. So if I'm starting up or buying into a business, for example, it would be absolutely ridiculous to think I'm going to sell that business within a month. A year at a push, maybe, but highly unlikely. So if I'm buying or setting up a new business, my aim would be to sell it in 5 to 10 years. And that would be a sensible thing to do. If you're buying Dogecoin, for example, or any other shitcoin out there, I mean, yeah, if you hold on to it for 5 to 10 years, it may go up, but it also may stop existing, like so many shitcoins do. So I guess with stuff like that, like, for instance, Doge, or maybe, mind you, Doge has been around for a long time. Any generic shitcoin, I mean, yeah, you probably want to go in and out. So thanks, Elon, for pumping Doge. That was quite interesting. So yeah, as you said, context is everything, and it really depends on the asset. Just like, for example, my Tesla stock. I know you've got Tesla, I've got Tesla stock. I'm not in that to, flip and sell for a quick cheeky profit and then go elsewhere. That is me. Like, I don't want to ever sell Tesla. That's my Warren Buffett type buy and hold forever. Because I see big things happening with Tesla. And I think I would also put Bitcoin and Ether in that category as well. So, and this is why I guess when you look at my crypto portfolio, I've got a whole, like 70% of it, whatever that looks like, is buy, hold, and don't really ever sell. But then the other chunk of it is me dicking around with shitcoins and altcoins and trying to grow stuff. So I guess, yeah. I mean, does anyone else have any other questions or thoughts? I mean, relating to that or not? I mean, in fact, does that answer your question, Adam? I guess everyone has personal different time horizons.
It answers my question, and I think that's what people need to understand, is what are they trying to achieve. So, yeah, with the shitcoins, as you call them, or alts,
yeah,
it might be an in and out in a day.
Yeah, exactly. It may be even, something like buy on the rumour, sell on the news. Typical type stuff. And also, I think you should have a goal with assets. So normally when I buy an asset, it's not because I want to do or I want to own that asset. I normally have an ability asset or a capability asset, reason. So for example, if I have an ulterior motive. So let's take business, for example. If I'm buying a new business, I will have either two reasons for that. One, because I want the capability. So let's, for example, buy a marketing company. It's because I want the capability of having a marketing company to, pimp other stuff to. So that's something which I can then use, and it will help all my other businesses. Or it's something that I'm going to flip for a nice enhanced exit multiple down the line. So that's really the two things there. If it's for crypto, like the sole goal of my cryptos is not because I want to, buy. It's not like I've got a lot in Aave at the moment, and it's not because I love Aave and I want Aave. It's because I want more Bitcoin and I want more Ether. And I just think in the short term, Aave and some of the other alts I'm in will accelerate faster than Bitcoin. And the goal is to simply use that, get in on that hype or the acceleration, and then eventually flop over into Bitcoin. And then I will own Bitcoin for a long, long, long time, because I think that's where the world is going. But most of the time I've got an ulterior objective. And so when I look at my crypto pot, yes, I do want to accelerate faster than Bitcoin and then flop over into Bitcoin, but I also want to use a lot of the profits from the crypto to help my business ecosystem. I think I mentioned this in the previous one, is that just because I have a business or two which has really defined marketing funnel, again, the word funnel is such a shit word. Client attraction journey is probably a better term. I know I could take money and I could grow it a lot faster in my businesses than I could by parking it in crypto or whatever. And this is why if you are in business, it's utterly crucial. Like, I cannot stress this enough. It's utterly crucial that you know what your capital arbitrage rate is. There's probably all sorts of different names for it. I should probably come up with a better name for it. But I just know that for every £1 I put into marketing in, say, one of my businesses, I know it will turn into at least £2 within 6 months. Easy. And so all you do when you have something like that, it's like, okay, well, let's test this. I'll put £1,000 in marketing and see what comes out. And 3 months, 6 months later, £2,000 pops out. Okay, let's add a zero. Let's put 10 grand into marketing and see what pops out. Oh, great, 20 grand's popped out 6 months later. Well, this seems too good to be true. Let's pop another zero on. Now I'm going to put 100 grand in. Oh, 200 grand pops out. And so that's all I've been doing for years. I'm nothing special. I just focus on enhancing, how to attract leads, and then how to cultivate your leads into clients. And then once they're clients, how to cultivate those clients so they become long-term clients. That's all business is, really. You just got to provide that value. And so for me, it's a much safer play putting money in business. So Bitcoin, crypto in general, is just a way that I can generate very quick profits and then diversify back into the business, which is something which I can control. So yeah, I mean, does anyone else have any thoughts on that? Or opposing thoughts? I mean, as I said, I'm all up for honest and open discord, or non-emotional discord, because that's the only way you can understand or find things that you don't know. You don't know what you don't know, obviously.
You strongly discourage day trading in pretty much all of your literature. Would you still keep that thesis with a lot of the altcoins?
Yeah. Most traders don't win. We know that from hard empirical data. We know that most traders don't win, and that's because most traders are day traders. They're dicking about in the 5-minute, 15-minute charts, and it's close to gambling because they don't have an edge. They don't have a statistical, mathematical edge. And even if they do, they're not going to execute it for a large enough data sample so they can, actually reach that edge. So yeah, and day trading is stressful. It's like that day trading showcase I did last year. Some of you may or may not have heard or seen me do this, but I have a little collection of trolls, and my trolls say all sorts of misinformation about me. And I think there's an anti-Facebook group for an anti-Siam Facebook group, which I find quite funny, and it got to me one day, and I was like, Siam doesn't actually trade, he can't make any money, he's not profitable on the market. So I was like, well, screw you. And so I opened up and the link is in, I have to find the link because I put the broker generated report online. And whilst I'm talking, I'm going to try and find it so I can pop it into the Facebook chat live. And basically I opened up an £88,500 account, and for the next 2 months I day traded it. Now, I don't recommend day trading, but I know how to, and I grew that from £88,500 to 200 grand in 2 months. But it was stressful. I was literally, my eyes were bleeding. Oh, they weren't bleeding, obviously. But yeah, I need to find that report. And so yeah, just don't do it. Just don't. It's super stressful. So Lee Taylor, hey mate, good to see you. It's been a long time no see. Hope the baby's doing well. So Lee has said, I'm looking at lending crypto to maximize returns. Have you done this and have any tips? If so, do you peer-to-peer or go through exchanges or platforms? Now, it's funny you say this. I literally about half an hour ago posted out a post, or posted out a post to my students, and I've just checked out, because I'm currently experimenting with crypto lending platforms, and the reason being is that I see a bit of I see this as a bit of a growth sector in crypto at the moment, simply because you have to look at, there's a big chunk of people out there who have now made millions, if not billions of dollars from the recent Bitcoin rally, etc. And a lot of these people that own a big chunk of crypto, they don't want to sell, they don't want to exit into fiat, they don't want to miss out on the boat because of that PAG, that potential appreciation growth. And so what they're doing, or what they have been doing, and what they are doing, and what they probably will be doing, is instead of, if they want some liquidity, they can actually stump up or park that Bitcoin or Ether onto these crypto lending platforms as collateral, and they can borrow from them. They can take out a cash loan up to 50 to 80% of whatever they stump up. And I did that half an hour ago. So I'm playing with small figures at the moment. So I deposited 50 grand's worth of Aave into the Aave lending platform. And where is the post? I'm just trying to find it so I can get the APR. And I borrowed 7 Ether. Now it's a shame I can't draw any pictures, because that's how I explain things. I'm not an audio person, I'm a visual person. I like to draw, but I'm gonna have to use my hands for those of you on Facebook. So basically, I didn't want to over leverage I could have borrowed more, but it then put me in a weird category. So yeah, I basically borrowed £12,000 worth of $12,000 worth of Ether from obviously parking up $50,000 of Aave, and there's no time limit. So all I have to pay is the APR. So the APR is, looking at the screenshot, 1.85% APR, and it's variable, so it will go up and down over time. And so the seesaw, which I'm basically considering here, is on the cost side. So the risk side is, what are the borrowing costs? And I've plucked out a figure out of my arse. I'm always pessimistic with my arse figures. And I've said, right, let's say the total borrowing costs are going to be like 20%. So because I borrowed 12 grand, so what's 20% of 12? That's 2. Yeah, so let's say it's $2,000. Okay, and let's say I'm going to hold this for 2 years. So $2,000 times 2, so that's 4 grand in terms of costs. And by the way, these are probably the most extreme figures out there. So on one side of the seesaw is 4 grand's worth of cost. Now the 7 Ether I've borrowed, will it make more than 4 grand, to offset those costs? And so I have then plucked another figure out of my arse, going, what price do I see Ether at in 2 years' time? Now, obviously, no one knows. No one knows. I'm looking at the charts right now, and I mean, it's shot up from like $100 to, where is it now? Sorry, not $100. It's shot up from $400 to $1,745 in the space of like a couple of months, which is just nuts. Will it carry on? Who knows? I don't know. But I have sort of prophesized. I've said, right, I think over the next 2 years, with the amount of capital that's likely to flow into this market, we could probably hit $3,000 Ether pretty easily. So let's do the math. I get my trusty calculator out. So I do 7 Ether times 3,000. So that's $21,000 minus $4,000 in costs. So all of a sudden, I've made $17,000 profit. That's if Ether goes to $3,000 over the next 2 years, or 1 year, or whenever. So for me, it's just a little experiment. So it's the blind leading the blind, actually, because I'm just experimenting with it. And the cool thing, Lee, with these platforms is that you can do a sort of an inception thing. Because if this works, you could basically double leverage or triple leverage. So for example, on my thing, I'm looking at a screenshot on my other screen here, I've borrowed 7 Ether. I can actually park that 7 Ether back into the platform and borrow off that 7 Ether and borrow, say, another 3 Ether. So it's like inception borrowing. So what this means is that if I did that, I could basically borrow, more Ether than, and then it's like a little Russian doll of borrowing. But obviously, you're adding more risk every time you do that. So I'm playing it safe at the moment. I'm in the safe
So
category.
what's the security then? Is the security the Aave you bought?
Yeah,
Can you not sell that?
Yeah, you park it on the exchange. So if I wanted to sell the Aave quickly, then I would have to basically pay up my loan, my borrowings, and then extract it. The downside to this, though, Adam, Lee, and everyone else listening, is that the gas fees for Ether are just ridiculous, absolutely ridiculous. So Ethereum has a long way to go until it can be used for practical uses, for pretty much anything else, because the costs were obscene. So to put $50,000 worth of Aave onto the Aave platform, it cost me $130 odd in gas fees. Ridiculous. And then when I went to borrow the 7 Ether, it was another $130 odd. So it's $260 worth of transaction fees. Now, in the way I've looked at this is I've just put that down as a business cost. Like, you know, sometimes you get a loan, there's an arrangement fee. So I've just looked at it like that. But yeah, we'll see how it goes. And the thing is, like Richard Branson always says, if you've got something that works, or you find something that works, you've got to scale it. So all I'm going to do is I'm going to monitor this for half a year, whatever, and see if it goes well. And if it does do well, I'll then just plonk 6 figures into Aave, into the lending, and borrow more, and then I'll do, yeah. We'll see. It could go horribly wrong, so just play with it, Lee. I mean, does anyone have any questions? Anyone will pop their hand up and talk? Hopefully, my goal for these half-an-hour chats every day is that it's not me talking 100% of the time. It would be great if we had like 10 people all chatting. So please speak. I want to hear from you, lovely peeps. No? Just silence. Just me and Adam chatting today then. Oh, we have a hand. Oh, we have 2 hands. Awesome. So we have Tom again, and we have Carl. Right, you both have the mics. Hey, Carl.
Hi, Sam. Hi, Adam. I thought I'd break the tumbleweed just to be polite.
Sweet. Oh, thank you.
You're welcome. Yeah, you talking about businesses early on. What's your criteria in 2021 for buying a business? What do you look for? What sort of niches? What's your
great question.
Main goals?
So I've actually paused my mergers and acquisitions for the meantime, simply because the dust hasn't settled. We're in a completely batshit crazy world right now, and although there are some sectors which are painstakingly obvious are gonna crash, like tourism, or not crash but continue crashing. So tourism, stuff like that, like cinemas, they're never gonna reopen properly. Like, they were struggling before COVID. So I find it odd that people are still buying like Odeon shares or, you know, Cineworld shares. Like, they can't pivot. I mean, yeah. So obviously there's loads of sectors which are going to bomb, and I personally think commercial property, as in high street commercial property, is gone forever. But in terms of normal, you know, buying business, etc., I'm just going to wait for another 18 months, 2 years or so, just to see where the dust has settled. I see big opportunities in the testing. So I know, I don't know whether I will enter this, because it's a bit of a shitty business idea and model. But basically, whatever Bill Gates says happens typically. And he said that over the next few years, he's gonna, well, not him, but him and the World Economic Forum, the UN, etc., they're gonna get to the point where they can test 20% of the globe in weeks, which is nuts. That's how many billion? It's like, call it like 1 to 1.5 billion people. So they're going to be rolling out huge infrastructure so they can test, you know, virus tests, etc. Over 1 billion people within weeks. Now, how are they going to do that? They're going to lean on lots of different independent retailers, etc. So one of my crazy plans was to buy a GP surgery and also turn it into a testing centre as well. But to be honest, I can't be asked. It's not something which I'm familiar with. But going back to your other question, which is actually the thing that I should be talking about, is the criteria. So ignoring all the bullshit that's happening at the moment, my old criteria, and this is just for me personally, it was I would only buy a business that was doing 300k net profit per year minimum, 30% net margin minimum, been trading for 3 years, or had 3 years worth of accounts. That means that they would have been trading for at least 4.5 years. Scalable online, because the way I grow businesses through online marketing. Having a management team in place, and what else is there? Yeah, and that's pretty much. Oh, and it also needs to be congruent with your existing empire. So they're the sort of the 6 things I look out for. Now, when I do buy a business, I either buy 35% of a business or 100%. And typically these days I buy 35% of the business because I don't want to dick around with the operational bullshit of a business. I don't want to go into a new business and end up with 10 times more problems and dilemmas. So that's why I like 35%. So you still got a meaningful chunk of that business. You can control the whole business with the other director, because that other director is, the 65% shareholder, is still there running the business, dealing with the ops of the business. So I can then just be a silent shareholder pulling the strings from behind the scenes. So I like that. And also it's a lot cheaper to get into 35% of a business than 100%, and you can still control it. Or I'll just buy 100% of a business and make it my train set. But the thing I like to do with mergers and acquisitions is buy lots of different 35% chunks of stuff. Obviously make it all congruent, so it's all in the same empire. But then you can roll them all up into sort of a bigger ecosystem. And then guess what? You'll be, the bigger pie holder across the whole board. So it's definitely worth. Like, I've made so many mistakes with M&A. It's ridiculous. I've bought all sorts of different businesses and different industries which I really shouldn't have been dicking around in. So definitely buy things within your own criteria. Now, obviously, the criteria I just gave you were my personal criteria, but obviously I've been doing this for a while. I've bought like 15, 20 odd businesses in the last 5 years. So if you're starting out, obviously don't have that criteria, and maybe remove a few zeros. Start off by, buying businesses that are doing 4 figures, 5 figures. Ultimately in business, I treat it like a video game, because I'm a gamer. And when you lose, you just hit reset and do it again. And I'm playing the 5 to 9 game. And the 5 to 9 game is set up, run, grow, and sell a business for 5 figures. And then do it again. Set up, run, grow, and sell a business for 6 figures. And then 7 figures, 8 figures, then 9 figures. That's the game I'm playing at. And every time you do it, so that's why it's good to start small, because you go through the whole business cycle. And I would say 99% of business owners have never gone through the full business cycle, which is set up, run, grow, and sell. No one does the selling part. They set up, run, grow, run, and they get stuck there. And it'll grow for a bit, and then they'll run it, and then it'll go stagnant, and then, yeah. So that's just my opinion. I mean, is anyone else here in investments? Does anyone else have, other thoughts regarding M&A, regarding that question? Because it was a good question. I guess ultimately you need the thing that I really look out for is the management team in place, because if I buy a business, and that director dies, I don't want all of that, the responsibility coming to me. If there's an existing management team in place, you can then quickly promote the ops manager, who would have already been in that business for a few years and knows everything, and go, right, ops manager, the director's now dead, or worst case scenario, you're now general manager, here's uplift in pay, now it's your train set, go. And I want these metrics reported to me every Friday afternoon, and I'll leave you alone as long as the metrics are above the line, and if it's below the line, I'll give you a little prod and say, why is it below the line, and that's it. That's how I run the businesses. I've got a whole bunch of key metrics I look at, and if the metrics are doing as agreed, I just leave my team alone. So did anyone have any questions? So I'm going off on a rant. I'm talking for 25 minutes now.
I had a kind of related but unrelated question.
Oh yeah.
So, understanding you're not a financial advisor,
correct?
Let's
Never
say
will be.
You flash forward or gone back in the past, and you turn up to a pub, and there's 3 people sat there want to have a chat with you. One's got 5 grand, one's got 50 grand, and one's got 500 grand. And they ask you where you would invest that money at the moment, given the markets are mental. How would you respond to each?
I hate that question. I really do.
You're welcome.
I hate that. Every session we've done, I've had someone that's asked that question. And I can't answer it. I genuinely can't, because everyone is different. So first of all, they're all probably going to be different ages. So if you're 70 years old, if one of them is 70 years old and the other one's 20 years old, there's going to be a completely different risk appetite there. The 20-year-old one will have pretty much no risk, whereas the 70-year-old person obviously should be doing something a bit more, softer.
Okay, so that's the context then. Let's say they've asked you to do, or what your view would be to grow that money as best they can over a 5-year period.
Oh.
So forget their age, the goal is 5 years.
Okay, but then again, there's a risk appetite. So my risk appetite would be considered extreme for most people. That's because I'm swinging as hard as I can, knowing that I don't give a shit about my hit rate. I just care about the R multiple. Because I know that if I swing 10 times and hit once, I'm going to be set up for life. And I've had multiple swings where I've connected and it's done, 6-7 figures. So I don't mind blowing 50 grand here, 20 grand here, 50 grand here, because I know one of those swings will connect. Now, the 3 people in the pub, I don't know their risk appetite. So again, there's that. I also don't know their family. Are they single? Are they living alone? Do they have dependents? Is it their life savings? Is it inheritance money? Like, there's so many scenarios. But I know I'm dancing around the answer that you're really looking for. But so if I was in that pub and I had a few pints and I wasn't putting my financial advice guard shield up, because I do not give financial advice. If you're after 5-year max returns, stick it in Ether and forget it.
Yeah, so it wouldn't vary based on the amount you've got to invest type thing. You take the same approach regardless of the amount you had.
Yeah. Honestly, I've never been more bullish about any other asset on the planet than crypto right now. And yeah, fire and forget. But if they wanted to be active, then it's different. And then I'd say get into business, because the R multiple in business will absolutely trounce any crypto R multiple. So
go on, let's go down that path if you've got time for it. So again, 3 scenarios: small investor, 5 grand, medium, not even a medium investor, but slightly bigger chunk, 50 grand. A bigger chunk than that. How would one get started in business at those different levels?
Wow. So I've got a friend, actually. I've just seen Jason Greystone in the Facebook Live. Hey, mate. So we've Jason, you'll recognise this quote, because we have a joint friend or mutual friend or mentor, a guy called Dan Priestley, and I used to have lunch with him every month or so. And one of the best things that stuck in my mind that Dan actually said to me was that when you're setting up a business, you need to do it like a bank robbery. And with a bank robbery, what you don't do is go and rob the bank on your own, steal the cash, and then after the robbery go, right, I'm now going to look for the getaway driver, the lock picker, the heavy gunman, the whole team. What you do is before you go and rob the bank, you get the driver, the heavy gunman, the lock picker, the negotiator, or whatever, a team of 5, let's say, team of 5 or 6, and then you go and rob the bank. And guess what? It's going to be a lot easier because you're not doing everything. And business is exactly the same, and it's one of the best analogies I've heard of in a long time. And so if you're setting up a business from scratch with 5 grand, it's going to be tough. I'm not going to lie, and you can very quickly bleed money in all the wrong places. Whereas if you were someone that had 50 grand or 500 grand, you could basically say, right, I'm going to chuck 20 to... you could allocate 20 to 50 grand in a business idea and then go, right, there is enough money here to hire 5 or 6 people with an OPEX, so operational expenditure rate, so basically a runway, a burn rate of, let's say, a year. And so you hire this team and go, right, here's this money for marketing and whatever. You have a year's worth of salaries and marketing, go. And you could do like what Zuckerberg did and say, hey, you got X%, you got X%, give them share options. So if they hit certain targets, they can get shares. And that way you can set up and run a business completely removed and without any effort. But you can't really do that if you're starting with 5 grand. So with 5 grand, you've really got to hustle. And what I did back in the day, this was like 12 years ago, and it's sort of still relevant. I joined BNI, 4N. So these are like networking groups. So Business Networking International, 4 Networking, and obviously pre-COVID, in every town or city, there are dozens and dozens of free networking meetings. And so I think when I first set up I was a bullion dealer. I joined every networking group there was, to the point where there was like a 6-month period where I was networking. I was doing breakfast networking, lunch networking, evening networking, and I was getting fat from all the food that you eat, the shitty food you eat at these networking.
That's how I got all my clients, actually. Sorry to jump in, but it was brilliant.
Exactly. And guess what? So my sole goal was never to sell, and that's the thing. You should never ever sell. Try and be that sleazy salesperson at networking groups. You have to just try and make friends. And again, I really didn't like BNI. I left the military for a reason, because I just don't like being told what to do. And BNI was like, right, you got to be here at 6 o'clock every Thursday morning. You have to come here with 2 leads, otherwise you're a failure. And I was like, oh my God. I did it for 3 years. I sucked my tongue. No, I gritted my teeth. Yeah, I held my tongue. I don't know, whatever that saying is. And I just did it for 3 years. And my sole goal was simply make friends. And so I did 6 months of ridiculous networking. And then guess what? My new business group was like multiple hundreds. And then obviously I made friends and acquaintances, and then that helped grow my business. So that was really cheap. Because I didn't even have $5,000 when I set up my bullion business. So yeah, it's completely different. Oh yeah, and Jason, spot on. Yeah, disclaimer: we do not plan to rob a bank anytime soon, or ever. Sorry. Yeah, so you've got to network. But for me, like if I'm setting up a new business from scratch, I don't want to be doing the do. I do it like I'm about to rob a bank.
Okay, it's really useful. Appreciate that.
Yeah, yeah. I hope it helps. So that's 32 minutes. Do you think we can squeeze in one more question, folks? Any other questions? Wai Lun Kong said, how's tax calculated? It's normal CGT. So for cryptos, it's either 10% or 20%, depending on your capital, on your CGT threshold. Any other questions? Maybe we can squeeze in completely different, non-crypto. Are there any hands up here that we can have? A non-crypto question. Just to spice things up. Yes, no. Going in 3, 2, no questions. 1.
Thanks for your time.
Okay, no worries. Right, 33 minutes. Let's call it a day, and I'll see you lovely legends tomorrow at 1600 again. Thanks, everyone. Cheers, folks. Bye.